The tractor trade has been trucking along this year. Names like Caterpillar, Deere, and AGCO are up big in 2021, but the Chartmaster says it might be time to harvest those gains. Let's get to Cornerstone Macro's Carter Braxtonworth. Carter, take it away.
Well, before we get to the charts, obviously these are darlings, and yet strangely, the sell side has price targets for both stocks 12 months in advance that are lower than the current price, so perhaps not darlings. First chart. What I've done here is I've taken Cat and Deere and plotted them as though they were one security. They both have about 110 billion market cap. So the two lines you're looking at, the first is Cat and Deere, as though it were one security juxtaposed against the S&P. It's a one-year chart. And obviously you can see there that the Cat Deere line is up fourfold over the S&P, up 100% versus 26% on a trailing 12-month basis. Next chart, it's a 15-year chart. Same exercise. Cat and Deere as one security, plotted equal weight versus the S&P. And here we see more than a double, meaning Cat and Deere up 420 versus the S&P up 200. Third chart. Now we're just looking at the basket itself, this two-stock basket. Cat and Deere, 1980, all the way to present. Now you can barely see those past prices. It's been so steep. So next chart is a log chart, exact same chart, but instead of arithmetic, it's logarithmic to sort of mute the rate of change. And it's a 45-degree angle. In fact, final chart, you can see it here. I've put in the channel. So Cat Deere as a single security has been ascending inside this channel, and every time it gets to the top of the channel, it's backed away. Bottom of the channel, it's bounced. We are just now right at and slightly above the top of the channel. And so the thinking here is, again, these are a little bit ahead of themselves or a lot ahead of themselves. But just to put that in context, consider the following. Each stock is up 11 months in a row. Neither has ever done that in its history, right? Each stock is trading at a record high price to sales. And each stock right now is trading at a level that the 47 analysts that cover them believe is so high that their 12-month price target is below where the stocks are trading now. So whether you take it from the sell-side community, looking at fundamentals, or the charts, either way, I think the message is take profits, reduce exposure, write calls, do something.
Carter, thank you. Carter Braxtonworth of Cornerstone Macro. Guy Adami, I go to you because not once, not twice, probably 3 or 4 times you've given Cat as your final trade. You meowed once, in fact, I believe.
Yeah.
Right. And so what do you make of this trade now?
It's amazing. Carter, you know, the way he speaks in those just sort of those dulcet tones, he's terrifying in his cadence and his pitch. He's actually scared me. Look, I understand what he's saying. I would push back and say, listen, on a valuation basis, given their earnings growth, Caterpillar is still cheap. He is correct, though, that the run has been unparalleled in the history of both these companies, so maybe it's time for a pause. He's also right that analyst community really hasn't ratcheted up their price targets, so maybe Caterpillar got ahead of itself at 225, and maybe back to that 185 level makes some sense. So good for CBW, bad for the meowing me.
Tim, quick on Cat or Deere.
That chart on Deere is gaudy, as Guy would also say. So I think I would take Cat over Deere. I would prefer, though, to own in the mining space the folks that are mining. So, you know, Caterpillar, sure, but the industrial metals are booming. Look at the price in copper. Southern Copper out there saying there won't be any real supply in copper for maybe 8 to 10 years. So, again, go with the miners. They're the ones that I think ultimately are the beneficiaries of all this activity.
Shepard Smith here. Thanks for watching CNBC on YouTube.